Yes, welcome back traders to Trade Like Skills channel. This is your mentor Skills FX speaking. In today's video, we are going to look at order blocks. And many of you guys have been asking yourselves, what are order blocks? How do we trade order blocks? Blah, blah, blah. So today I'm going to talk about order blocks, and I hope you understand this very well. So what are order blocks? If we are to start with theory work, of course, later we shall look at the chart and I'll show you real examples. So please stay and watch well and understand these order blocks. So order blocks, first of all, this is a specific price zone on a chart where large institutional traders have placed significant buy or sell orders. So that means that that's where buyers and sellers have been fighting from to see who is going to dominate the market. So creating a cluster of activity that can potentially influence future price movement and act as a key support or resistance level for traders to watch for potential entry and exit points. Of course, when these zones are created, they create points or zones on which the market might retest to, and then it might give that market the momentum to continue to the direction that the market has been into. As we know well, we have a bullish and bearish market. So many of you guys don't know about bullish or bearish market. A bullish market is an uptrending market, a market that is going higher highs, breaking higher highs to the higher zones. So that's a what? That's a bullish market. A bullish market looks like this. A bullish market in a textbook view, it's a market that is coming from low zones, going high, and it tends to come and retest and then break higher highs like that. Market breaks higher highs, retests, and these zones that the market retests in are mostly order blocks. So this is how an uptrend moves. This is a textbook example of an uptrend. So the market is breaking higher highs and creating what we call BOSs. Those ones who are doing smart money concept, of course you understand what I'm trying to say. So it is creating what we call BOS, or break of structure. So when the market breaks higher highs, of course it's creating what we call BOS, and it's going higher highs, breaking higher highs or recent highs. So this is a BOS, and another BOS. So these zones where the market retests into, where there is a lot or where there is a fight between the sellers and the buyers, are called order blocks. So order blocks are formed by candlesticks. Of course, the candlestick that is fighting with the other and the other breaks it or engulfs it out. It creates or it leaves an order block behind, in which the market might come later and feel or tap into that zone and again continues to what? To its direction like it has been doing before. So we're having a bullish market which is going up, and this is an uptrend. Of course, it's a bullish market that is going higher highs. And then we are having also a downtrend or a bearish market. Bearish market, for it comes from higher highs, retests back and breaks lower lows, retests back and breaks lower lows, like that. That's the move of the what? The bearish market. Bearish market. Yeah. So this bearish market, of course, it's coming from higher zones, from the higher zones. After the market has changed character or the market has changed direction, then the market starts a new direction. And now for the downtrend, the market is creating also BOSs or break of structure to the lower what? Lower lows, breaking to the lower zones. I think you can see how the market breaks to the lower zones and it's going where? On a downtrend. So there are many things that we look at before we take trades into these zones. So before we go too far, if you want a good and a fine community where you can learn from trading, you can still join our community, our Telegram channel, where we show you what we do always, and we show you real work that you can still do, and you can learn how to trade too, and you can do this too. So you can also trade like these others who are making money daily in this community. And if you want to join the community, of course, you can check the link in bio, and then you tap on it, and then you get to join the community. You send a request, and then we allow you in the community. So before we go into that again, let's just continue and we finish out what brought us here today. So when the market is breaking lower lows, of course, it is retesting back into those zones. So these zones, like these last zones, are where the buyers and the sellers have been fighting before we get who is going to dominate the market. So who dominated the market here? The sellers. So let us start with bullish order block. So with a bullish order block, the property of a bullish order block is that the last selling candlestick in an uptrend creates what we call an order block. And the rules are that you only look for the buying opportunities in a bullish order block. We don't sell in a bullish order block unless you know how to trade, how to see liquidity grab or liquidity sweep, like how I do. Then you can trade sell in a bullish trend or a bullish market. So we also target the previous highs as the take profits. You understand what I'm trying to say? So let's go and look at a bullish market and where we can mark the order blocks and what I'm trying to say, how it looks like. So when we scroll here, you see that this market is bullish and it's moving, breaking higher highs, creating BOSs. So we say that the last selling candle on a bullish market is a what? Is an order block. So I think you can see these selling candles turns into order blocks. So wherever the market breaks, let's say here market broke high and the last bullish bearish candle, the last bearish candle or selling candle turned into an order block for this zone. That's why when the market retested back, it had to bounce back to its what? To its journey where it has been doing what? It has been going. So I think you can see how the trend is moving. It's a bullish market. Of course, when this market came back, it was sweeping liquidity from here and then tapped into this order block and then continued up. So I think you can see the power of what? The power of order blocks. So I think you can see that this is a what? A last selling candle when the market was moving came, mitigated this zone, and again market tried, or sellers tried to push the market down to break this lower low, but they failed and instead they were engulfed by this candlestick. So this created an order block. Same as here, these sellers tried to push the market since we are in another order block here, and then they failed since the market had gotten proper momentum because it's in a bullish movement, and then the market broke this high. Of course, it created a what? An order block. And this happened when the market broke the other side, it came back to this order block, and I think you can see how the market did what? Respected the zone, hence breaking higher high. Same as here, market left another block even though it wasn't what? Mitigated. So I can see imbalance, I can see what. Even here, we can see when the market was moving, it broke last high and then the market came back to this order block and then it retested into this zone and again continued moving because it had tapped into what? An order block. So I think you can see, so most of institutions Most of banks, that's where they fight from. Like they that's where many orders are settled. That's where many orders are settled. And that's where the market decides for which direction to take. So if another block is broken, of course the market is changing the direction or market is shifting. You understand? So other blocks often appear within consolidation phases where the price is moving sideways sometimes, as this is where institutions may accumulate positions, of course. So other blocks do that. So I think you can see this market, it is still bullish, but I think you can see all this zone was too consolidating and was fighting, uh, and it left many other blocks behind. This other block, other block, other block, and I think you can see most of the other blocks were mitigated. So that's how the order blocks are formed. So these are bullish order blocks. Let's look at bearish order blocks and get to understand what they are. So bearish order blocks are the blocks formed on a bearish market or a downtrending market. A downtrending market, a market that is in a downtrend. So when the market is breaking lower lows, of course, it's creating BOSs and leaving what we call order blocks behind. So the properties are that the last buying candlestick in a downtrend. So the last buying candlestick in a downtrend, when it is broken or engulfed by a selling candle, a selling move that is strong, that creates also a BOS, that's when we consider that zone as an order block. So for the rules of this, we only look for selling opportunities. Previous low is the take profit. Of course, we only look for selling opportunities in this market or in this bearish market, and previous low is the take profit zone, of course, where we take profit from. So for example, this is a bearish market, and I think you can see how the market is breaking lower lows. So there are many things that we consider. Guys, you should join my mentorship, because these videos can give you tips, can give you something, but of course you won't understand anything deeply. Sometimes you will be on another block and it is broken. For example, look at this. This one is broken, but you don't know why it was broken and the market moved to that side. So you should join mentorship, because I teach more in mentorship. Here I give just tips about the market. So I think you can see what the market did. Market broke lower lows, and then market retested back to this zone and tapped into this other block and then had to drop. And I think you can see what is going on here. And the market is creating BOSs. Of course, the market is breaking lower lows and then leaving other blocks behind. And that's where the market is retesting in order to gain the momentum to drop it down. So that's how a bearish movement is, or a downtrending market does it. So these other blocks tend to act as entry zones for the sellers, and we only look for selling opportunities. We only target the lower lows that has been here, not longer lows. Some people will confuse you by telling you have to look for 1 to 7 RRR. Do you know RRR? That is risk to reward ratio. So guys, understand me, the market doesn't have the same legs, of course. Sometimes the leg is short, sometimes the leg is long. So you have to look for the nearest or the recent high or the recent low in order to get out of the market, because this is 4 hours chart, guys. This is 4 hours chart. Do you know how many pips are from here or are from here to this zone? There are many pips, guys. There are many pips. So you have to be someone who is ready to make money and not to be greedy. And you have to appreciate the money that the market will give to you. You understand? So let me hope you're understanding what I'm trying to say. When the market was dropping down, what happened? Market broke BOSs, and I think you can see it is leaving other blocks behind. We said it is the last bullish candlestick in in this what? In this bearish market. It is the last bullish candlestick that was engulfed and created an order block. That means that when the market was dropping, buyers wanted to enter and dominate the market, but they failed since the sellers entered with more power and then they dropped the market down. So I think you can see when the market retests to that zone, of course, the market will drop down and break. So that's what happens in the markets, in the bearish market. So when the market broke here, this BOS, market retested to this zone and was supposed to come down and break the lower low because it was in a what? In a downtrend. And I think you can see what happened. When the market tapped into this order block, it reacted. After reacting, but the market failed to do what? To come down and break the lower low. Hence, the market continued and broke the high or the internal high, creating a change of character or a change of direction or market structure shift, whatever you can call it, and then left an order block because now we have started another bullish move. So look at this. This is an order block because this is the last what? Selling candle, the last selling candle before the market goes and breaks. So I think you can see when the market retested back, what happened? Market also did what? The market obeyed or respected this zone. So that's how the market breaks and retests the zones. So how do we trade that? We only wait for the market to come into this zone and then we take a buy entry. We target the last high. Of course, we get out of the market. Simple and the greatest strategy that you can use. You can use this strategy for a long time and you make money. But you also need to understand the real and valid order blocks that you should be waiting for instead of being swept because you are in the liquidity zone thinking that you are what? You are in a real order block that you're supposed to be taking, because the market can induce you to the zone that you can feel like as if you are losing in each and every trade that you want to take. So guys, if you like this video and you saw it as helpful to you, you can like, share and comment, and don't forget to subscribe because more videos are coming and more videos are coming, guys. So you can still join my channel, my Telegram channel, and you see what guys are doing, how guys are making money, and then how you can join. Just check the link in bio or in the description. I'm going to put it in the description down below, and then you can check it and do what? And then join us, guys. Okay, see you guys. Let's see how we go when you come with us, and we have to stand together and we make more money, guys. I've been trading for quite long and I'm making some good money, so I would like to help you to make money because I'm tired of seeing people blowing accounts, guys, and being lied to. All right, guys.